Today, why APRA is not fit for purpose. Hello again, it's Martin North from Digital Finance Analytics, what our latest post covering finance and property news with a distinctively Australian flavour. And today I'm joined by John Dahlsen. John, of course, is an ex-director of ANZ years ago and a businessman and has a wonderful range of experience and some really important messages to share. Hello, John. Good to see you again.
Morning, Martin.
And John, just to remind everybody, you've had very significant business experience, but also, of course, as a director years ago of ANZ. So you're speaking about the financial sector from, if you like, both sides of the fence.
Yes, and the most relevant thing being chairman of the audit committee for many years.
Yeah, excellent. So
which gives you a deeper insight.
Absolutely. Nothing like being on the inside to see how things really work. So look, the APRA review is now out. And, when I read it, I thought, well, it's pretty damning. What did you think about it?
Well, Martin, July last year, I wrote an extensive article in the IPA review about what was wrong with APRA. And it was a little controversial at the time. And I think the reaction may have been, John, is that really true? Well, Graham Samuel has proved that everything I've said was absolutely accurate. And Dr. Wilson Tsai is another person that's been in the media criticising it. And he too has for some time had strong views, and his views have been vindicated as well. And it's just a bit of a shame that neither of us couldn't have got more traction earlier.
Absolutely. It's worth remembering, of course, that Frydenberg renewed Wayne Byer's contract before the results from the Royal Commission were out and before the results of this review were out.
Well, I thought that was an extraordinary thing to do, but I think it indicates Wayne Byer's power in Canberra. That Canberra bubble, who knows where the power lies? And I think he's certainly got power in spades. Because in my view, that was a very inappropriate appointment. Because in my view, APRA has been fake. It's been absolutely misleading the public in that it has claimed it has had a lot of power in doing things, but in fact it's been doing nothing, and I think it's bordering on being thoroughly misleading. And the notion that Samuel did make one comment of support for him in the area of the capital structure of the banks and some of the risk weighting. Now, I don't agree with that because I think his risk weighting policies have damaged the economy in a serious way. The imbalance between the risk weighting of residential mortgage and businesses has led to an explosion, as we're now getting all the gory detail in residential mortgages. And on the other hand, the lending to business, particularly mid-sized and small business, has shrunk. Now, that just simply isn't good for the economy. The other worry I have is that he penalised the smaller banks and he put the bigger banks at a competitive advantage. Now, the reality is that the loss rate of the smaller banks was no worse, probably better than the bigger banks. So why, therefore, would you change the risk banking? Now, his claim was that they didn't have in place these massive systems to properly analyse risk. Well, at the end of the day, how do you judge risk? You judge risk by the losses that have incurred, and there is absolutely no evidence that the smaller banks are any worse. In fact, you'd argue that they're better. So his actions have actually distorted the economy in a serious way. But I've got another very big beef, and that is his attitude to competition. Clearly, APRA's policies have been pro the banks. And what he's in effect done is he's protected the fortress. Now, I don't mind saying when I was on the audit committee, and I think it's sufficiently long ago to talk a little bit, what would happen is that he would come to a bank and he would say, your benchmarking on this and activity on this kind of risk isn't very good. You've got to get up to scratch. And you'd very quickly know that he'd been to one of the other banks who were doing that particular risk very well. So guess what happened? In one way or another, the technology from that other bank that was doing that well went to the one that wasn't. So what he was doing is he was making the banks all the same, and that's very bad for competition, and everyone comments on it. And it's interesting that the chairman of one of the banks, not ANZ, at one time said that APRA and Wayne Burns was doing a wonderful job. And I looked at that and said, what? And then I twigged. Of course he's doing a good job. He's protecting the banks. Now, that's one issue that still hasn't been adequately addressed. Now, the Productivity Commission skirted around it. The Harper Review wisely said, I can't get into specific sectors of the economy because I want to look at all sectors. Hayne sort of skirted it. Productivity Commission had a bit of a go at it. But that, to me, is one major subject that is still on the table and has not adequately been addressed.
Yeah, no, I agree, John. And it's interesting that if you look back over the last 2 or 3 years, APRA a few years ago actually declared that they felt it was better to have a small number of large players because it actually supported, quote, financial stability, and it was easier to supervise, right?
I think you should emphasise the latter words, easier to supervise.
Exactly.
I mean, what all regulators would like is to have one entity to regulate.
Yeah,
not
exactly.
a dozen.
Yeah, makes their life easy, right? But effectively,
it really does.
Yeah, and the Productivity Commission absolutely said that the structure of competition in Australia is actually acting against consumers and against households, and essentially in favour of the banks, and exactly what you're saying. The other point, of course, with regard to the capital ratios, is that APRA is mirroring the Bank for International Settlements models for capital. So effectively, the risk weights for mortgages relative to business lending are mirroring precisely those that are actually coming down from the Bank for International Settlements. Then you ask the question, well, why is that? Well, that's because, of course, all the central banks are, corralled around the Bank for International Settlements. And then if you ask the question, so where did those ratios come from? Well, they came from the people who were in the banking system and, senior bankers who were actually interested in basically steering the ratios towards what would benefit them rather than actually would benefit the broader society. So we've got some really fundamental issues here, right?
We have.
With regard to capital and cash capital ratios, and they're completely wrong. They're actually driving behaviour which basically puts more weight on the mortgage side of the book than we should ever have. Right. And then second, we have a set of cultural issues with regard to the competitive structure in Australia and around the world, by the way, as well. It isn't just Australia, right, where you've got a small number of large players who are protected by the regulators, protected by the regulatory frameworks. And why is it then not surprising that the banks are effectively able to get away with blue murder when it comes to actually providing services to customers at reasonable prices? They're not doing that.
Yeah. Well, two comments on that. Of course, Hayne's blown that bubble.
Yeah.
And secondly, you've got to remember that Wayne Burns spent some time in Switzerland, and he's part of the international establishment.
Yep.
And of course, what's been driving him is to honour his former role rather than what's good for Australia. And the notion that this has to be the same in all countries in the world is absolutely ridiculous. They should be moulded for the particular country. I mean, other countries won't probably have our problem of an imbalance between residential mortgages and business. They'll have different set of problems. But it seems to be this sameness. But look, there's another issue in all this, and I wish Graham Samuel had tackled it. What he could have done was to produce a chapter on what the damage to the Australian economy has been since Wayne Burns has been in office. Now, if you calculated that cost to the community by wayward policies or inadequate or nil policies, it is huge.
Yep.
Now, no CEO in any company in Australia could survive that.
Yep.
They would be sacked.
Yep.
And I think it's absolutely ridiculous that he should stay there. How can you transform? He's been there so long. How can you transform that agency after all that period of time? APRA needs changes in its leadership. It needs change, and it needs a board. And I'm pleased that a number of the journalists are, some of them are starting to tackle this, but none of them quite as head on as I would like. But I think APRA is one of the most failed regulators that we've had. And I think Hayne was very shrewd, because I think Hayne suspected that and came to the conclusion, gee, that's too big for me, there's got to be another inquiry. And the government was wise in getting hold of someone like Samuel, because he was not a bad lawyer. In fact, he was a good lawyer. He's a very experienced regulator, and he's got a very good nose for business. And he was the right kind of person to do that. And I think they've done a good job, except for that other comment I've made. But I hope what I'd like to see is, as probably you do, I'd like to see more discussion about this. We're not the sole font of wisdom. I'm sure there's other aspects of this that should be debated. But it just seems that with APRA, you're not allowed to talk about it. You're not allowed to question. And the way he held his press conference by telephone rather than by... And I think the so-called secrecy, which is to protect the information in the banks, I think is sheer nonsense. And I think that APRA could have had a much more educational role. It could have put out in the marketplace information about the way they risk-weight things to give remortals a chance of understanding them. But instead, it's a mystical science which only a few people in the country can possibly understand, which is sheer nonsense. This stuff could be put into the community, and we mortals could engage in a reasonable debate.
Well, I agree with that, John. And, there's an interesting contrast between what's going on here in Australia and the Reserve Bank in New Zealand, right, which has been much more forthright about the risks in the banking system. They've had a set of scorecards for each bank available publicly on their website for more than a year. And they have entered a phase where they are basically steering a path clearly in favour of the community and in favour of driving financial stability the right way. Whereas in Australia, the whole system is designed to protect the big banks, that there is superficial changes but nothing really changing. And I think we have a structural question beyond APRA. I think there's a question about the relationship between APRA and ASIC and the Reserve Bank, and in fact the whole regulatory and supervisory framework in Australia. So the natural next step for me would be to actually have a conversation about that, because essentially at the moment it's not doing the broader Australian community any favours at all, and
no, it's not.
It's still unfortunately protecting the major banks.
That's right. Well, I have another perspective about that. I think there's conflict between the regulators. I mean, take the obvious issue of competition. You've got APRA that's destroying competition. You've got ASIC trying to physically... Now, they do have their financial regulators, but I think the cooperation between the agencies is not just only at the top, but it should have a working relationship right down through the organisation. And when they're dealing with major issues, they should be talking with their counterparts in the other agencies about what impact their policy is going to have on the community. And and the other thing is, in Australia, there seems to be a treasury or a financial establishment which is extremely difficult to penetrate, and it's very hard to get discussions going about certain things. Take, for instance, the inquiry that Jane Hume handled, where I think it was one of the minor parties was pushing very strongly the notion of demergers. Well, there are some people in the community that know a fair bit about that and wanted to participate in that inquiry and give some evidence. I would have liked to have given some evidence. I would have liked to have joined the conversation, and she refused. So that was, in my opinion, a fake inquiry. That was an opportunity to have a conversation. What troubles me is, why are you worried about having that conversation? I'm not pretending to be the sole font of wisdom. I just want the conversation. And I want the conversation because I would like to hear what the other views are.
Yeah.
I would like to know what your view about it is. I would like to know what Treasury's view is. Why? And I think we're rubbishing the man in the street. And the man in the street is no fool. We take them for granted. And it is possible to have a conversation about these things with them. They understand it. So I don't think the Treasury establishment is serving the community very well, which is a different perspective on what you're saying.
Well, I'd actually sort of take that further. There is a thing called the Council of Financial Regulators, right?
Regulators, yeah.
And guess who's sitting around the table there? Treasury, ASIC, APRA, and the Reserve Bank. So in a way, that is the nexus point, right? And you can see how the groupthink works from there, right? And I think that is probably where the problems really emanate from,
right.
Because essentially everybody there is convinced about three things. Firstly, that more credit is fine. There's no limit to how much credit we can actually create. Secondly, we need to put more credit into the system because that's basically going to support the broader economy. And thirdly, we've all done hugely wonderful jobs and therefore there are no risks in the system and everything's fine. And therefore all of that noise out there in the real world is nothing.
Ignorant.
Is nothing to do with us, right? That's essentially how I read it.
And but worse, they're ignorant. Now, a very good example of what you're saying is the Wallis Inquiry.
Mm-hmm.
And my information is that it was the Wallis Inquiry that said we should separate APRA out from the Reserve Bank. That was their recommendation. Now, my understanding is they had a huge fight that was being strongly resisted in Canberra. And my understanding is that it was finally arbitrated by the Prime Minister. That he had to step in and said, no, this is what Wallis recommended, this is what we'll do.
Yep.
But it was only that intervention to stop that. So you can understand the fierce pressure, resistance, or whatever else you want to call it, to making significant reform moves of any kind, which is absolutely consistent with what you're saying.
Yeah. And there's one other point, John, which I want to make, which is that APRA was charged by Hayne with driving cultural change into the major banks, right? It was one of the critical things that came out of the Royal Commission was that the bank's culture is, too aligned in terms of greed, too aligned in terms of profitability. Never mind the customer, they're just cannon fodder, basically. And so there was a very important thought about cultural change. And yet my question is, how can an organisation that is now being called out for having absolutely appalling culture internally inside itself be made accountable to drive cultural change inside large financial institutions? It makes no sense at all.
Well, all I can say in the corporate world, as the CEO, you would have been sacked a long time ago. And that raises serious questions about the way Canberra operates. Serious questions.
Yeah, absolutely. So
I wonder if I could.
Yeah, go on.
I wonder if I could raise another issue I have, and that's the demergering of the banks. And of course, Jane Hume in her committee killed that off. I've been a proponent of this for some time. I think you are too.
Yes.
And a few others in the community. Now, I'm raising this now. It's not old and stale. I'm raising it because I think the need or the opportunity to do it is now greater than it was before. I think with the added complication that's happening in banking, with the increased regulation, with the increased compliance, with the emergence of these high-tech companies that are going to have a big impact, and with the emergence of all these fintechs. Now, people are inclined to dismiss the fintechs because they're quite small, and I'm involved with one of them. But the thing about the fintechs is they are attacking every aspect of banking. And the way you've got to look at the fintechs, you've just got to add the number of them in each of the bank segments. No single one's going to have it's going to be like a flea on an elephant. But I can tell you, if you add them up, it's like a gorilla on an elephant. And so, however you look at the banks, they've got they are, in political terms, a big target. And a lot of people are having fun at attacking them. And I would suggest to you it's pretty easy meat. Mm-hmm. Now, I've been impressed recently by two large demerger transactions, Coles and Woolworths. Now, each of them have undertaken significant demerger. Now, I know, having formerly been involved with Woolworths as former chairman, that to let Dan Murphy go in a demerged entity must absolutely hurt them, because it is a brilliant format which has been very successful. But no, they're letting it go because they believe, as Coles did with their demerger, that value is best created by having separate entities. And I admire the boards of both those companies, who are both, in some respects, downsized. Their rankings and their power has been done. Yet what they've done, each of them done in a different way, have taken decisions which are clearly in the interests of its shareholders, and clearly in the interests ultimately of the consumers. And their respective power bases and size has been scaled back. Now, I asked the question, why won't the banks do the same thing? Now, I accept that there are problems. Capital gain, there are meant to be capital gains tax exemptions, but on the edge there are problems there. And I accept that there are very significant stamp duty issues, because you're transferring a huge amount of assets and you've got the states collecting a huge amount of stamp duty. I would have thought it's so much in the interest of the community for these banks to be demerged that the government should pass an act and have a moratorium for a period of 2 or 3 years where stamp duty is not paid, or persuade the states to agree to that, and that we leave it to the banks to do it on a voluntary basis. Now, what I'm disappointed about is that there aren't one or more of the big investment houses who haven't looked at the banks that they do with a lot of other companies and say, look, this bank would look better if it was demerged. And I'm disappointed that there hasn't been some information out in the marketplace, because when that information goes out into the marketplace, people, oh gosh, that makes sense, why won't they do it? So then you get the shareholding community saying, why won't you do it? Now, of course, what banks can say is, look, it's too costly. And of course, BHP's faced up to that. It is very costly, but with these duties. But it's really a hindrance on the more efficient operation of the economy. And so I think a government can justify saying to banks, you've got a moratorium for, say, 2 years where you can do this and you won't incur these costs.
Yeah, well, John, I can tell you something. Over the last 6 months, I've been talking to a number of investment banks specifically about the opportunity and, specifically how value can be created through a demerging process, right?
And what's their view?
And I can tell you that all of them are shit scared of going anywhere near it. Right? Why? Because they are part of the same institutional processes that the banks are involved in. So I don't see the analysts as over and against the banks. I see the analysts as being on the same side as the banks based on my conversations with them. And, it's a bit of a cozy situation. They get private briefings on what's going on, and they publish that information to their communities and, their clients. And they look as though they're, being superficially critical, but there's almost no real deep analysis of what is really going on inside the banks. So I think they're on the same side of the fence.
Well, I was hopeful that one of them might break out and have the courage. But the other thing is, I would have hoped the boards of one of the banks had enough courage to do this, and to go to the government and try and persuade the government to have this stamp duty and tax moratorium. But you see, if nothing like that happens, there are going to be as a big targets, they're going to be gradually chipped away.
Yep.
And if you demerged them and gave them a simpler structure where you narrow the distance between the CEO and the customer, where you could streamline the regulation and the compliance stuff for that kind of activity, you could take a huge amount of regulatory cost out of it.
Yep.
And it would enable the demerged entities to much more effectively deal with the competitive threats they're under.
Yeah.
So I'm not too sure how we solve this problem.
No, well, it's a real interesting question. Of course, 86400 got their full banking license this week,
yes,
according to APRA. So that's one of the first fintechs to essentially look as though they're going to be able to compete head on with regard to, the core banking. And experience overseas has shown that these new fintech players, without all the legacy systems and processes,
yes,
and with a different cultural set of norms, can actually succeed very quickly and gain a lot of traction and a lot of momentum in the marketplace. So there's a burning platform, I think, that, John, that you're calling out here, that the major banks need to wake up and recognize that they cannot just continue to do what they've always done, which is to pretty much ignore all of this stuff and say, oh, it's unimportant, we're big enough and strong enough to be able to resist it. I think this is fundamentally different. I think the fintech revolution
I agree.
is the absolute catalyst. And, bank boards should be asking some really hard questions about the long-term future of their organizations and how best to optimize their businesses for the long-term benefits of their shareholders and their customers. And therefore, the conversation about splitting them into smaller pieces, getting more agile, getting more nimble, and essentially competing head on with these new players is the conversation that should be taking place. And yet, I don't see any evidence of that, and I don't see any evidence of that from the regulatory system, nor indeed from government. So effectively, I think everyone is fiddling while Rome's burning.
Is burning, yep. Now, the other one that's about to get a bank license is Judo.
Yep.
Judo Capital, I know some of the people involved with that and have been talking with them, and they're having an absolute field day. They're getting customers away from the bank system like you wouldn't believe.
Yep.
And their growth potential is absolutely enormous. So you only need half a dozen of these players, and to destroy my argument about aggregating the little fintechs, there will be some of them that will merge as serious players. And the other thing that troubles me, why would you be a bank director at the moment? How the bank directors can carry on their jobs with all the problems they've got. Why wouldn't they say, this is too difficult for me, it's too complex. I need to be full-time to handle this. I can't get an insurance policy. I can't get insurance policies are becoming almost impossible. Why I'm accepting all this regulation risk? I've got class actions all around the place. Why don't they conclude themselves, in their own self-interest, that this is a better path forward?
Yep. No, I think that's a really important point. And, again, my experience, and I've spoken to a number of directors of banks over the years, but a lot of them are still, institutionally aligned to the old ways of thinking. And as you say, many of them are actually only part-time and frankly don't get across the full detail of what's really going on. So I think you're right, they are exposed. My analogy is this, John. If you think of the Spanish Armada and Francis Drake, right? That there's a wonderful story about how these massive big
That's right.
Spanish galleons sailing straight in a straight line. They were fine, but they lost the battle because Drake had the small maneuverable ships to go in and around the Armada and basically just outsmarted them.
I think that's a great story, and I think it sums up a lot of words from you and I.
Exactly. John, it's been a pleasure to talk with you again, and thank you once again for sharing your perspectives. I think there's a really important message, and we'll make sure they get out.
Good. Thank you, Martin.
Thank you, John. And there is no doubt in my mind that the Armada analogy is really powerful when you think about it. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.